If you are still thinking about buying a new construction house in the Triad area, then you do not want to miss this video. Here I'm going to show you new construction houses in the Triad, North Carolina area, which are available. And the great thing about that is the builder is offering a very competitive mortgage rate of 4.99 ARM, and I will show you exactly what it is and how you can take advantage of that. So right now there are a few properties available. This one is available in High Point, North Carolina for $374,000, and you can see this is a ranch style house with a area of 2000 square feet with 3 bedroom and 3 bath with 2 car garage. You can see the front picture as well as you see the construction quality. It is nice. I have used this builder before and they are pretty decent in terms of construction quality and the kind of floor plan they have. So I will show you exactly how much you would be end up in paying if you go ahead and buy this property, because you see that in the market there are older homes available, but with the higher interest rate of 6 or 7%, your monthly outflow will be much more higher than what it is for the new construction house. So let me take you through the numbers and then you can comment or you can give me your feedback on what makes best sense for you. So let's see the mortgage scenarios just in a glance. And since the builder is offering 7.6 ARM at 4.99%, that means for the first 7 years, the rate will be fixed at 4.99%. And after that, it will change based on the current market rates. So if it is higher, for 6 months, it will change to that new rate. And if it is lower, then it will come down. So most likely people who are willing to move on to a different properties, or they are willing to refinance after the 7 years. So you can do that even before 7 years. If the rate go down below 4.99%, you can go back and refinance your entire loan so that your monthly outflow will be less than what it is. So let's look at the different scenarios that we can expect with this purchase. So for the purchase amount of $374,000, we are assuming that the property taxes are about like $374 per month. It could be a little less because usually the amount is based on the purchase price and we are considering 1.2%. It usually falls between 1 and 1.2. Homeowner insurance, it could be less than this, but I'm just being a little bit more conservative by assuming $1,800 per year or $150 per month. Usually new houses, the insurance in North Carolina is between $700-800 to $1,000. So here also I'm taking a little bit higher number. And also if you are paying less than 20%, then 0.6% of the loan will be covered as a private mortgage insurance or PMI that a buyer would end up in paying. So we'll see exactly how much you end up in paying in different scenarios. So in scenario number 1, when the down payment is 5%, that means you are paying as a down payment of $18,700. That will bring you to own the house. The loan amount will be the difference between the purchase price and the down payment, which is $355,000. And with this fixed interest for the first 7 years, you are expected to pay $2,590, close to that, depending on the property taxes being the same as we are seeing, homeowner insurance $150, and again it may include the HOA fee if there is any, which most likely is not that high amount. So you can see that private mortgage insurance is about $177 for this 5% down. If you are able to only put $18,000, then you will be end up in paying about $2,600 per month to own this house. Now let's look into the second scenario, which again, this is just a summary of the first scenario. But if you look at the second scenario, which is 10% down. In that case, your down payment will be about $37,400. Your loan amount will be $336,000. Your principal and interest payment would be $1,800, and your total monthly payment will be $2,494, which is close to $2,500. Here you end up in paying $2,500, close to that amount, when you put a 10% down, which is again significant amount you have to pay down in order to make it 10% down payment. The next third scenario is 20% down payment, and in this case, if you put a 30% down, that means you have to put around $75,000, which is again a big amount. But again, people who are diligently saving and keeping a down payment available for buying a house, and in some places you get some assistance based on your income level. And in North Carolina, there is NC Advantage program where the North Carolina state provides assistance in down payment, and they are like available for people with a certain income range, and I'll make a separate video for that. And in this case, if you see that loan amount is close to $300,000 and your principal and interest payment would be $1,600 and your PMI will be eliminated. So in that case, your total amount will be $2,126, which is very, very good. Like if you are living as a tenant and paying over $2,000, guess what? You can definitely become a homeowner, given that you have the down payment available to purchase a house and pay a less amount every month to own the house. So if you look at the side-by-side comparison, so with 5% down, you have definitely, you're putting a less money down, but you end up in paying more on a month over month. For 10% down, you end up in paying about $2,500, and with 20% down, you end up in paying $2,126. So this is how you would be approximately paying for the property that I showed you before for that particular amount. And this is definitely better in terms of the total amount, because if you buy at the current market rate of 6.5% or 7%, then definitely these numbers will swell up by $200 to $300 more on a month-to-month basis. So the bottom line is, either you pay 10% or 5% down, you basically save $110 per month with reduced PMI cost. But with a 20% down, which is definitely a game changer, you save close to $478 per month as compared to 5% down. But definitely it needs a higher down payment. And just to put a disclaimer that these calculations are based on estimates and just for illustrative purposes. The actual cost for taxes, insurance, and PMI will vary based on your location, your credit profile, and specific lender requirements. There are other qualifying homes in the Triad area. You can see in High Point, Jamestown, and in Pleasant Garden, as well as they do have a few construction in the Burlington and the Graham area as well. So if you are still thinking and still waiting on the rates to come down, you want to think it again, because if the rates will go down, then definitely the prices will go up. And at this rate, if you are able to get a house for 4.99, again 6.218 as an APR because of the other costs, but as usually if you have a good decent down payment available, then this is the right time to buy a new property rather than buying a used existing one. It's better to buy a new house so that you can take advantage of these rates that is being offered by these builders. So reach out to me, call me, text me. I'll be happy to help you in making that decision. Thank you for watching. Thank you for listening, and have a great rest of your day.